2022, when you bought Bitcoin below 10,000. Well, I did back in early or late 2019, but my dumbass sold it early 2020 because I was buying a house, and now I wish I would have held on or hodl. I wish I would have hodl. All right, let's see. 2022 noob traders, panic sellers. 2013 and 2017 hodlers. Yep. First time. Yep, definitely. People are all freaked out because of this bear market. It's not that bad, guys. It's going to be fine. We'll survive. We've done it before. For you newbies. Today we're actually not going to be talking a lot about crypto. We're actually going to be talking about some other boring finance stuff. The Treasury Department announces new Series I Bond rate of 6.89 for the next 6 months, which would be cool, except which is still a great rate, but however, it has dropped. But they just announced it today, so we're covering it because why not? I don't have treasury bonds, but you might want to know about this. Series I bonds, an inflation protected and nearly risk-free asset, will pay a 6.89%. I mean, I don't even get out of bed for anything less than 10% daily, which really isn't a lot. Through April 2023, and the U.S. Department of the Treasury announced today, the third highest rate since the I bond was introduced in 1998. However, investors need to consider downsides such as locking up funds for 1 year, and the rate is likely to come down as the Federal Reserve combats inflation. Cool. So you can watch the video if you want. Again, I'll put the article down below so you can look it up. But whatever, we're just going to cover the basics. It's down from 9.62% yearly rate offered in May, and then the investors may lock in this rate for 6 months by purchasing any time before the end of April. So again, I don't own treasury bonds. If you want to do that, that's on you. I mean, that's cool. Let me know if you do. Comment down below. So I knew this, but I didn't know this other part. You can purchase assets online through Treasury Direct, limited to 10,000 per calendar year for individuals. So I knew that, and I knew you had to buy it directly from them. However, I didn't know you can also use your federal tax refund to buy an extra 5,000 paper I bonds in that year. So that was pretty cool. I actually didn't know that. So I learned something. All right. So I thought this was pretty funny though. On October 28th, Direct crashed as investors rushed to meet the deadline to lock in the 9.2% annual rate for the 6 months, which is pretty impressive. So it has a record of 979 million for that day, which is nearly as much as in a single day were sold in 3 years from 2018 to 2020. I thought that was pretty impressive. You guys can read the rest of this stuff. It's pretty boring. Oh, nice chart. Okay, cool. But get down to the stuff that matters. Again, you can read it if you want. Some of the downsides of I bonds. One of the trade-offs is you can't touch the money for at least 1 year. And then also there is a 3-month interest penalty if you cash in the I bond within 5 years of being issued. So just something to keep in mind if you do choose to buy them. There's a couple other stuff about them lowering inflation. Doesn't really matter because they're not really trying to lower it anyways. But that's up to you if you want to read it. And I feel like, I don't know, over the next couple of years, even if we're in a bear market now and hit a recession, which we're already in anyways, for the next year and a half, I feel like we're going to have a pretty big boom. Again, that's just my opinion, I guess, in the next 2 to 3 years, or 2 to 5 years. So 6 point whatever isn't that the greatest when you're going to get 20s and 30s and 50s%. So hopefully, again, I'm talking about my ass. I don't know anything. I'm just an idiot on YouTube, and never take advice from idiots on YouTube, especially financial advice. So this is actually kind of interesting and a little ironic, I thought. I'm not actually going to get into it too much because it's pointless, but again, the article will be down below. Coinbase files to support Ripple against SEC case. However, didn't Coinbase didn't they Ripple off their platform? You can't buy it on their platform. I thought that was kind of ironic and kind of funny. However, Coinbase joins a blockchain association, an industry lobbyist group. Spend the Bits, a crypto payment app that uses XRP, and John Deaton, a lawyer, in hoping to shore up Ripple's case against the SEC, which sued Ripple at the end of 2020 on allegations it sold XRP as an unregistered security. Again, you can read all through it. It doesn't really say much, but I still kind of think it's funny that Coinbase would do that when they took Ripple off of their platform. I'm sure for legal issues and all that. But I thought it was kind of ironic. And it's still kind of funny how like Ripple's one of the only ones getting attacked by the SEC when there's so many other, I don't know, projects out there that are mere images of Ripple and they are not getting attacked by the SEC. Funny, weird. I don't know what's really going on. Who did what? Who of the co-founders of Ripple slept with one of the SEC's wives? That's what I don't know. Total conspiracy theory. All right, so Yahoo News. This is great. Oil giant Saudi Aramco has 42.4 billion profit in third quarter. That's neat because we've been spending out the ass for gas, so that's super cool. I'm glad they're having a great time over there. Their third quarter. This is a pretty long article again, but yeah, the basics of that was pretty interesting. 42.4 billion the third quarter. It's one of the second largest company. Awesome, because we're getting really hard by gas prices still. So that is really fun. And then you can kind of look through some of this too. Last year, this time, it was 30.4 billion. So they've really increased, which is great. And this is the quote I like the best from their CEO. Well, global crude oil prices during the period were affected by continued economic uncertainty. Our long-term view is that oil demand will continue to grow for the rest of the decade, given the world's need for more affordable and reliable energy. Awesome. So you're trying to take advantage of us while you can, because hopefully by then we're all like EV and all that other crap and total green energy. It's a myth. I'm just kidding. I hope some of that stuff, because I do own stocks in EVs, especially Tesla. Well, yeah, so they're basically just going to take advantage of us because they know they can. So that's super neat. Thank you, CEO Nasser. All right, and then our last one today, again, this is just a pretty impressive one. I wish someone would have said something about it earlier, but Johnson & Johnson to buy heart pump maker Abiomed for $16.6 billion ahead of consumer health spinoff. Yeah, why didn't anyone tell us about this ahead of time? That would have been nice. Johnson & Johnson agreed to pay $380 per Abiomed share. It's a 50.7% premium over its closing price of $252 as of yesterday, Monday. Shares of Biomed surged about 50%, while Johnson & Johnson's shares slipped 0.5%. That would have been nice. I would have loved to got in on that. Johnson & Johnson's basically upfront payment is just shy of the 52 high of 381.99. I mean, I wouldn't say just shy. Oh, yeah, it is just shy. It's like $2 below. Okay, so it is just shy. But again, if you want to read the rest of the article, I'll put that in the notes. Some of this other stuff I just found it kind of interesting, and I really wish we would have known about it ahead of time, but nobody bothered to say anything. So now we're saying it after the fact. So that's cool because it doesn't really help us anyways. All right, guys, if you want me to cover anything, comment down below and let me know. At the end of the day, remember to stay awesome and keep loving each other like I love. I don't know. I do like biomed type stuff. I'm in the medical field, so I do like that kind of nonsense. But J&J owning it, I could care less.